Hello, good afternoon. You're watching Market Fatafat on ET now. I'm Vinny Motiwala, with me Cheryl D'Souza as well. Cheryl, a very good afternoon. Today we started on those high levels, 25,000 coming in there. But after that, we saw that fall coming in. So 25,000 not sustaining, but we did hit those fresh record high levels for the markets.
Absolutely. A very good afternoon to you, Winnie. And if you look at the markets, yes, we have not been able to sustain those levels. Right now, we're trading flat actually. With a positive bias. We've given up that 25,000 mark on the benchmark indices, that's your Nifty. But if you look at Nifty, bang, trying to hold a bit of green. You have broader markets that succumbed under pressure right from the word go. So you had the broader markets that were in the negative territory right from that period on. But there are a lot of stocks to talk about, but there are also a lot of stocks or companies to talk about which are actually going ahead with their IPO. You have First Cry also, or Brain B Solutions, that is going to come out with this IPO. We have Mr. Supam Maheshwari, who is the MD and the CEO of the company, joining us in the show right now. A very good afternoon to you, sir. Thank you so much for joining us on ET now. And firstly, congratulations on the IPO. If you could tell us about your plans that you have for the company, especially how do you plan to utilize the IPO funds?
Sure. We'll be raising around close to 1,666 crores from this offer, new issue, and which will be utilized for opening our baby hug stores, and part of the proceeds, around close to 100 crores in baby hug stores. And then we will also be utilizing investing into our subsidiary Digital Age to open First Cry and other home brand stores. There'll be around close to similar number there as well. And after that, we also have utilization for investing into our Middle East subsidiary, where we'll be putting up 12 stores and warehouse. That's the third sort of a investment that we'll be doing out of our Middle East subsidiary. And then we'll be investing close to around 169 crores for Global Bees, which will be used for increasing our stake in the subsidiaries. And then remainder of the funds, part of it will be utilized for our marketing and advertising, technology, and remainder will be for the GCP purpose, which is typically 35% for general corporate purposes, including the unidentified acquisitions. So this entire total will be around close to 1,666 crores.
Right. Mr. Maheshwari, if you could just talk a bit in terms of the market size that you are in. What is the size of that market, domestic as well as international market, as well as what does the company, how is it the positioning over there in terms of the market share? What is it over there?
So look, Brain Bees, which is First Cry, is having a total addressable market of around close to $120 billion by FY29. In India, childcare, broken down into India childcare, which is close to currently around $34 billion, will become $68 billion by, as I said, FY29. International will become around $11 billion by FY29. And preschool market will become around close to 8, and D2C market for the D2C brands will become around close to 34 billion. So overall, $120 billion total addressable market that we are operating under. So that's very exciting for us. And within that, I would say that First Cry is the largest mothers, baby and kids shopping destination.
Absolutely, I'm sure a lot of them will concur with that. But if you could understand a bit more about your business, if you could tell us more about the category-wise as well as the age-wise revenue mix that you have in your balance sheet.
So look, in India multi-channel, we are talking about a $68 billion opportunity size between 0 to 12 age group, and a large 60% of that will come on the lower end of the age group, which is 0 to 6. So that's a very substantial part, and the rest is from higher age group. So that's how the market is split. Within that, a large 65% or 65-70% of the market is into apparel and footwear, and remainder of that has been split into consumables and hard goods like baby gear and nursery, and toys and others. So largely driven by apparel and footwear, and then divided into consumables and hard goods and toys and others.
Thank you so much, Mr. Maheshwari, for joining in with us. We'll keep an eye out on the IPO opening on 6th of August. But Tata Steel, that's the one that reported its numbers in just yesterday. How were they looking like? What more are the details? Let's go across and catch up the conversation that Aisha Faridi is having with TV Narendran.
We expect to get to a break-even situation in UK in the second half of the year, because these two quarters, Q1 and Q2, we were focused on doing the closures of the heavy end. So we closed the coke ovens end of March. We closed one of the two blast furnaces in the first week of July, and we'll be closing the other blast furnace by the end of September. So in the second half of the year, we will be using the slabs and hot rolled coils that we are shipping from Netherlands or India or buying from elsewhere to convert into finished products for the UK market. So that's expected to be EBITDA neutral or EBITDA positive, and you will not see the big losses that we've seen in Q1 and likely to see in Q2. So that's the way forward for UK. For Netherlands, as you mentioned, it's turnaround time simply because the blast furnace is back in operation. So it's actually after almost 5-6 quarters that we are having an EBITDA positive quarter, and it will continue going forward.
Okay, so could you help me with an absolute EBITDA per ton guidance for both UK as well as Netherlands?
So I think this quarter will see margin compression simply because everywhere we are seeing steel prices at probably its lowest point in a long time. So as you know, the Chinese steel prices have come below 500. I think we last saw these prices during COVID. So we're seeing the impact of that. But I think we do expect prices to start moving up in the next few months, simply because at these prices, even the Chinese are losing a lot of money. So it's not sustainable. And I think we expect the H2 prices to be better than the H1 prices.
You wouldn't want to put a number to it, would you?
I wouldn't give you a specific number, but yes, Q2 will not be as good as Q1, but we expect Q3 and Q4 to be better.
Okay, we'll take it for that. But tell me, the steel industry, as we understand, has written to the government to try and take steps against higher imports. Anything that's moved on that front?
No, we made a submissions to the government, and I think the data says it all. I mean, if you really look at the prices at which the Chinese are selling steel, it's not that they're making money at those prices. If they make money at those prices, I can accept that they are competitive. But if they are losing money at those prices and we have to bear the consequences of it, that's unfair, because this industry is probably the best example of private sector investment in India currently. I mean, everyone in the industry is investing significant amount of capital to grow volumes. And at this point in time, to have unfairly priced imports is not really helping the investor sentiment for the industry.
Yeah, just taking a leaf from that, from what we understand is that Indian steel exports at an industry level have seen a drop of about 36% in the first quarter alone. Tell me, by when do you expect the situation to see some amount of improvement, if at all?
I think the challenge continues to be Chinese exports, both in pricing and volumes, because China is exporting almost 100 million tons a year of steel. So they're flooding world markets at very ridiculous prices. And that's why it really doesn't make sense for Indian steel companies to export at those prices. And that's why you see the exports going down. So that's the irony of it all. I think India is endowed with a lot of good quality iron ore. We should be the country which is converting into steel and exporting it. Whereas we have countries who don't have iron ore selling steel at prices below their cost. And that's an opportunity that we miss as a country, as an industry, because that's an opportunity for us, because we have the iron ore, we should be making the steel, we should be selling in India and also in the global markets.
But your India volumes as well fell by 9% on a sequential basis after what seemed like a seasonally strong Q4. Tell me what the demand has been like, because, and across verticals, auto, infrastructure, the boom sectors, so to speak.
So overall demand has been strong, and I think that's been the saving grace for us. So most Indian steel producers have been able to sell the steel that they're producing in the domestic markets because the demand has been strong. So far, steel consumption has, I think, roughly grown at about 10%, so which is good. And we expect it to continue to grow at a rate faster than the GDP growth rate because India is having investment-led growth, infrastructure-led growth. So that means the steel consumption should grow at a rate higher than the GDP growth rate. So I expect steel consumption to grow in the 8 to 10% range, which is good. I think it's happening across sectors. So you see construction is strong because of infrastructure, industrials is strong in commercial space as well, and residential has also started picking up. Um, Automotive is strong across sectors. Two-wheeler, motorcycles, which were weak, has been picking up. So there are, of course, ups and downs, and sentiments keep changing. But overall, I think automotive has been strong. Railways spend has been strong. Infrastructure otherwise has been good. So across sectors, we're seeing positive demand. I think one concern is there is still a tightness of liquidity, particularly for the smaller players. And I think that's something which sometimes makes them postpone the purchase. They try and match the purchase to the consumption. So these are the issues, but overall, I think demand in India is strong and better than anywhere else in the world.
Tell me about your net debt, because that also has seen an uptick on a sequential basis, right, to about almost 82,000 odd crore rupees. Do you see it inching higher further from here?
Debt has gone up largely because of working capital, because typically during the first quarter, some of the working capital that you squeeze out by the end of March comes back in. We are also stocking up a bit on slabs and hot rolled coils in anticipation of the blast furnace closure in the UK. We picked up a little bit more coal stocks for India because during monsoon time, we want to make sure that there are no disruptions on the supply chain. So I think it's seasonal. Overall, we expect net debt to EBITDA to be below 2.5 by the end of the year. We started the year at over 3, and we expect it to come down to below 2.5. On an absolute basis, net debt will be flattish. We don't expect a significant reduction in net debt during the year because this is also the year when we are going to be spending. We're going to have peak spending in Kalinganagar as we complete the project.
All right, so that's the management of Tata Steel in conversation with Aisha. But on that note, we'll slip into a break in this edition of Market Fatafat. When we come back, more stocks to discuss. Don't go anywhere. Welcome back. You're watching Market Fatafat right here on ET now. And let's talk about earnings then. Adani Port had come out with its Q1 numbers earlier today, and here's the company CEO Ashwini Gupta's take on the quarter gone by and what lies ahead for the company.
APSEZ has kicked off FY25 with very strong financial and operating performance. While on the financial front, we have delivered all-time high earnings, operationally, we continued to add strategic ports and logistics assets to our portfolio. I thank all customers, team members, and other stakeholders for their unwavering support during our growth journey. Some highlights from the past quarter. Firstly, on the financial front, during the quarter, revenue was up by 21%, driven by strong demand across our ports and logistics assets. Our focus on efficient operations and financial discipline led to a 29% increase in EBITDA and 47% increase in PAT. Our net debt to EBITDA stood at 2.1x. Next, on the operating front, on ports, our cargo volumes continued to be ahead of the growth in all India cargo volumes. During the quarter, we handled 109 million metric ton of cargo, which is an increase of 8% year on year and is double the growth of all India cargo volume. We remain focused on adding strategic port assets to our portfolio. We have signed 2 new port concessions in Tanzania and Kandla and won a O&M contract in Kolkata. Our Vizhinjam port, which is India's first transshipment port and is equipped with South Asia's most advanced container handling technology, received its first vessel recently. On logistics, We continue to execute on our strategy to offer end-to-end transport solution for customers. Our rail assets demonstrated strong growth during the quarter. Rail volume went up by 19% and general purpose wagon volume was up by 28%. Our trucking business, which was launched recently, added 3 new customer segments to the portfolio. Also, our agri-silo capacity, which currently stands at 1.2 million metric ton, will grow to 4 million metric ton as we complete our current expansion projects. Recognition by rating agencies. Our debt ratings continue to see significant improvement. We are the first Indian private corporate infrastructure developer to receive the coveted AAA rating. CARE and ICRA have rated us AAA. Additionally, S&P upgraded its outlook on APSEZ to positive from stable during the quarter, which demonstrates our commitment to financial discipline. Our efforts continue to be recognized across global forums. I'm very proud to share that 4 of APSEZ's ports were recognized in the World Bank's Container Port Performance Index 2023. These rankings consider multiple parameters, including productivity, efficiency, and reliability. Overall, our all-round performance in the first quarter positions us very well for a strong financial year, and we look forward to continuing the momentum in our business. We remain committed to building world-class sustainable transportation infrastructure that accelerates India's multi-decade growth journey and achieve our goal of 1 billion metric ton cargo volume by 2030. Thank you.
All right, so that's the management of Adani Ports talking about the numbers, the way forward going ahead for the company. But yes, it is earnings and it's pouring earnings, not even trickling in, Vinny. Emami has just announced his numbers. How are they looking? Because you track the sector very closely and you've also made the poll for it.
Absolutely. So it looks like a decent number, at least when you're looking at it on the revenue front. Yes, it's in line with what we were expecting. So revenues have come in at 906 crores. Expectation was 889 crores. Profits just slightly below what we were expecting. So profit front, yes, there's a slight bit of a miss there. But margins overall in line with expectations, slightly above the expectation. So all in all, we could say Emami was a decent number that's coming from the company. And specifically the summer season, that's something that is supporting the growth this time. So Navratna Cool, Talc, that is Dermi Cool, all of them surely working out well for the company. We'll wait out for some bit of an information coming in terms of the volume growth number. So it's as of now we do not have the volume growth number or in terms of the press release for that. We'll wait out for commentary coming in on that front. But as of now, in line set of numbers, we're seeing the stock is holding on to gains of 1.7% as of now.
All right, so that is Emami. That's the first stock that we discussed on this edition of Fatafat. But let me bring on board Ankita as well as Gaurav, who are joining us on the research end, and as well as we'll have Dhwani also join us shortly. But coming to the next stock, and that is Sonata Software. That particular account is actually under pressure in trade today. 8% downtick is what it actually saw on an intraday basis. The stock saw the sharpest intraday fall since May 8th and now still holding on to those lower levels for Sonata Software. They saw a decline in their profit, about 12% decline coming in on the profits, and that's one of the reasons why the number or rather the stock is under pressure, because the number seems to have failed to enthuse the street.
Surely keeping an eye on Sonata Software, but the next one also is an earnings candidate, Coal India. Ankita, how are the numbers? What are the brokerages saying?
Well, absolutely, Coal India is an earnings candidate. Let's first look at what the numbers look like. Now, the revenue is seeing a downtick of 3% on a quarter-on-quarter on a sequential basis. The PAT, however, was up 26% sequentially. The margins have also seen an expansion of 900 basis points on a quarter-on-quarter basis, and the EBITDA also came in at 14,337 crores versus 11,300 crores, which is up 27% on a sequential basis. CLSA has also come out with a note on it. They're maintaining an outperformance. They've hiked the target price for Coal India to 580 rupees. They feel that quarter 1 was operationally strong, low cost drove the beat, and they see the volume growth to remain resilient in the near term. And on the back of bullish note coming in also and a hike in target price, Coal India is trading with gains of 3+%.
All right, so that is Coal India for you. But let's talk about Maruti Suzuki. Gaurav, that one also came out with its numbers yesterday. We are awaiting for their auto sales numbers.
Yes, if we talk about Maruti Suzuki's numbers, this company came up with a great set of numbers for Q1 FY25. The company actually outperformed on all the parameters. Material costs actually declined almost.
All right. Actually, we'll come back to you, Gaurav. We'll just try and fix that line. But yes, Maruti Suzuki, that's the stock that you have to keep an eye out on, because right after the numbers yesterday, the stock saw a sharp spike, and now today also it opened up with a gap up, but now it's actually subdued in trade. 0.5% uptick is what it is witnessing, Vinny.
Absolutely, but let's talk about the next stock that is also buzzing in trade, Ceylon Exploration. This is a stock which actually surged as much as 20% intraday when you look at it, and this is on the back of a good set of numbers reported by the company. Look at the jump in terms of the revenues of the company, right? What we're seeing on a year-on-year basis, also a very strong performance coming in there. Almost a 120% uptick in terms of the revenue of the company. Profits of the company also seeing a very strong growth. Whether you look at it on a quarter-on-quarter basis or year-on-year basis, very strong performance. And this is the second quarter that we're seeing a good performance coming in from Ceylon Exploration. So surely that up move seems to have continued, and today the stock is locked in upper circuit as of now after a very strong performance coming in from the company. Overall, EBITDA has jumped up by 142% as well. So keeping an eye on this one.
All right, so that is all about Ceylon Exploration, but we have a lot more stocks to discuss right after the short break, so don't go anywhere.